Hello and welcome to Money Markets and More with me, Dominic Frisby from autumnal London. I'm back in the cemetery and today we turn our attention to the physical gold markets. By the way, I know cemeteries are very kind of symbolic, but the cemetery is the nicest place near where I live to walk and it's quiet, so that's why I always do it in a cemetery. It's not to symbolise the graveyard that is my portfolio, or that is the financial markets generally. Anyway, today we turn our attention to the physical gold markets because there is, as my friend, the veteran bullion dealer Ross Norman of Metals Daily put it, a disconnect between the gold price and what is happening in the physical markets. Our biggest challenge, says Joshua Saul of the Pure Gold Company, another friend, is finding enough stock on a daily basis to sell. There's a long line of demand, but very little supply. There's more demand than at the height of COVID. So these situations don't occur very often, but they do occur. And I remember 2008, I remember it like it was yesterday. Gold cratered, along with everything else, in the second half of that year. It lost probably over 30%. Went from memory north of $1,000 an ounce to about $700 an ounce, and the mining companies, as is always the way, fell by a lot more. Yet there was a scramble in the physical gold markets. Bullion dealers had never been so busy. The general public were rushing to get their money outside of the system into an asset that was nobody else's liability. And gold would later turn up long before most other assets. It went up with the commodities markets. But November was the low, and while the S&P carried on lower until the following March. But the fact that there was a scramble to buy physical gold, even as the gold price was falling, was telling, I thought. It happens. Now, coins and bars, says Ross Norman, quite rightly, are just a subset of a much bigger industry. And that industry obviously includes the futures markets, ETFs, exchange-traded funds, institutional buying and selling, central bank buying and selling, and of course jewellery. Now, ordinary investors may look at the world, the state of the world, and think, I need to own some gold. And they may be doing that at unprecedented levels. But it's not enough to balance out institutional investors who are, according to Ross, selling 3 to 10 tonnes a day. Now, as I say, these disconnects do happen, but they don't last. It's all about the US dollar, as we've been saying on these pages or in these videos for months. In the year to date, gold's up about 13% in sterling, which is an almost stellar return compared to the stock and bond markets, which are all down 20-30%. But against the dollar, gold's down 8%. So how long does the dollar stay this strong? And that's the question we have to ask ourselves, what we have to answer. And on current form, a while longer, it would seem. I've got that long-term target of 120 on the US dollar exchange, on the US dollar index. We're at about 112, 113, something like that. Ross, who's got an extraordinarily good forecasting record, is the LBMA champion almost every year. He agrees. He says the rampant US dollar looks like it might be here for a while. Now, you don't need to look further than US interest rates relative to European interest rates and US energy dependency relative to Europe's, and I include us in that, to understand why we are where we are. This is Ross. Never in my career, he says, did I think we'd see the circumstances we are now in and gold behaving like it is. It is extraordinary. The dollar's stolen the show, but nuclear war is a real possibility. And by the way, gold will survive a nuclear explosion. Probably the US dollar probably won't, but none of the three types of radiation that follow, alpha, beta and gamma, I read that on Wikipedia, will affect it. But one of the few bright spots in this market is what Norman calls the literate investor, who continues to support the gold price and buy gold. And Saul of Pure Gold makes a similar observation. His company makes a point of talking to clients as they buy and sell to understand their motivations. And as a result, they build up a lot of qualitative data. He says that everyone is looking to protect their wealth in a time when things are really uncertain. Well, of course they are. But there have been two notable trends that he has observed. And here's the first of them. That there's been an increase in buyers from the financial world. Traders, investment bankers, financial services, accountants, lawyers. They've been buying large sums. Not only have they been buying large sums, their trade sizes are bigger. The median trade size is probably 3 times bigger than it was a year ago and during COVID, Saul says. Many of them are obviously worried about what's going on, presumably behind the scenes at banks and in the financial world generally. These are Saul's words. They are considered investments where there is a lack of alternatives. So let's look at the other notable trend, and that is the exodus of money from real estate, whether commercial or residential. Joshua Saul says property investors normally like to remain liquid so that they have cash on hand ready for the next deal. Buy-to-let landlords, commercial landlords, people who buy big buildings and let out floor by floor, developers, companies, individuals, a lot of them have a lot of cash. They have an appetite for debt, but the increased cost of debt, plus the possibility that the underlying asset will fall in value, means there is too much risk for them. And so they are now parking that cash in physical gold. We're also seeing a growing amount of people with properties on the market, good luck selling, who, when their property sells, will move their capital into gold. And many are removing their exposure to debt, a type of debt that they might have taken 2 or 3 years ago. So what we're seeing then is capital flowing from finance and from real estate into gold. Not at the institutional level, but at the personal level. And I find that very telling. So here's another telling little fact. I've lost the path. There's a shortage of physical metal, as we've established. Premiums are much higher than they would normally be as a result. But that's still not deterring buyers. And guess where premiums are highest? China. That's where the demand for bullion is highest. As much as $50 over spot in some places, Ross tells me. And normally arbitrage would iron this out, but that's not happening. So this trend, I've talked about it many times, of gold making its way from from west to east continues. Here on the west, on the ground, there's a scramble for physical gold that you would not know to look at the gold price. It won't last, it never does. And I have to say the technicals for gold do not look great at the moment. It's all in a downtrend. That cup and handle formation that was on about a few months ago got us very excited. It now looks like it's no longer valid. It's been invalidated. So maybe, as in 2008, gold might have to go a little bit lower before it goes higher. But at grassroots level, there is a lot of smart money buying physical gold. Now, somebody's got this wrong. The question is, who? The buyers on the ground or the institutional investors? Well, that's, I guess the market will decide that one, as it always does. If you're looking to buy physical gold, coins or bars, I will recommend the Pure Gold Company. In London, I've got an affiliation deal with them, as you probably know. You can take delivery or you can store your gold safely allocated to you in vaults in safe jurisdictions. I'll put a link on the screen or in the comments somewhere so that you can find them easily or in the description. I've got a trip coming up, so you're going to see lots of videos from me from weird and wonderful places in the next few weeks. I hope you enjoy them. And last thing, wearing my comedy hat, if you enjoy my comic songs, we have a couple of shows coming up in London, in Soho, at Brasserie Zedel, which is me and the full band, the Gilets Jaunes. It's a fab venue for this kind of thing. It's going to be a great night at Crazy Coq's. So hopefully see you there. That is November the 23rd and 24th. 23rd is almost sold out, but we added an extra date on the 24th because the 23rd sold out. I'll put a link in the description. Thank you very much for watching. I'll be back with another video very soon. Goodbye.